Welcome traders, this is Brad Matheny. Today is the 13th of August. I'm trying to create some how-to videos using what I call my new Gunslinger tools. So first and foremost, we're going to take a look here at the actual Gunslinger tools combined. The way I have this set up is I have a Bollinger Band filter, adaptive BB Bollinger Band pressure system indicating trending. This is the NASDAQ for today. So you can see the early morning open, the breakdown of trending here fairly early, caught a nice bearish trend all the way down and rolled back into bullish trending very cleanly, very early back here, and stayed bullish pretty much all day long. Okay, so now we also have the pressure wave indicator set to short term and another pressure wave indicator set to intermediate term. Now the pressure wave indicators measures price ability to break Fibonacci highs and lows. So if you've followed my Fibonacci price theory, you know that every unique or standout high presents this type of a high or low type of a setup. So we have, if I go through here and look, you know, we have dozens of these setting up throughout price. And what I'm doing is determining if they stay open or if they close. Close means price breaks above it on the high side, and on the downside you can see here you've got lows here to go all the way across, you've got lows here to go all the way across, and like I said, there will be dozens of these, and I'm mapping them out. And I'm essentially mapping the pressure value when these levels get broken or breached. So the idea here is we track these going all the way through each up and down wave, and as they get breached like this to the upside, these close. And when they close to the upside, you'll notice that we will get bumps in actual value based on how many of them closed, how many of them were breached, and whether or not we had fairly strong momentum value, pressure value at the time. So you can see here as we're building into the trend, as we're breaking those Fibonacci highs, going up in an uptrend, establishing new highs and breaking the previous ones. You can see them here. I'll show you just real quickly. This is all based on Fibonacci price theory. I added in the pressure system simply because I wanted some measure to help you better understand how price moves in waves. Okay, so the Bollinger Band system is a trending system, very similar to the anchor bar system. In fact, it uses the anchor bar system partly to generate trending, but again, it also uses the Fibonacci pressure system. The Fibonacci pressure wave is a measure of high and lows set by Fibonacci price theory. When we begin to break downward, when we break downward, price breaks downward, you see that we start to accelerate through these trends, and when the trend begins to stall, you can see that the wave count system actually begins to stall as well. So this is a pause in trending taking place. This is a pause in trending taking place. This is a slight rotation to the negative side, indicating we've rolled a little bit, then we move back into bullish trending here. And I've got this set to short term, I've got this set to intermediate term. So what you're going to see is as we roll through price and we break these levels, this is what causes the waves pressure system to begin to accumulate greater and greater accumulated pressure. Same thing here. So this is a short-term system, generated a new trending system right over here. I'll try to draw this with a vertical line. You can see this indicated a nice bullish trigger basically right here. You can see that the wave system, the pressure system indicated a bullish trigger right here. It's about the same time that the Bollinger Band system generated a trigger. And of course we have the longer term trigger or intermediate term trigger generated a bullish trigger right here, indicating we've got a good solid uptrend. And what I will do is I will highlight these bearish triggers here So we get a, looks like a bearish trigger, probably a little earlier, but I'm going to say, because you see how this went down to 0 and this went down to 0, I'm going to say that we get a bearish trigger right here on the short-term settings right down here. I'm going to say that we get a bearish trigger right here on the rolling of the pressure system and on the Bollinger Band system. And I am going to say that we get the confirmation of a bearish trigger right here on the intermediate term system. That's this system right here. So again, what we have in this scenario, what we have in this setup is the ability literally to catch, early small positions if need be into these areas. And remember, you do want to be cautious at the initial part of a trend. You don't want to go boatload. I mean, this looks like a great example, but you want to trade efficiently. And the real efficient swing here is right here. I call it the sweet spot. The real efficient swing is this area right here, giving you that, well, let me draw this one. This is the real efficient swing, catching most of this. That's the big, beautiful swing you want to catch. And this is the big, beautiful swing to the downside you want to catch. So the idea here is you don't have to be a rocket scientist to figure this out. Okay, we move into sideways trending here. We move into sideways trending here. We move into weaker trending here. Let me go ahead and show you this so you can see it. Move this for now. You see here this downward trending. So the purple line is the pressure system, and the red and green line is what's called the accumulated pressure system. Now, as I teach you, these little areas here are what I call flash trends. When the accumulated pressure system begins to react quicker than the actual pressure code, like right here, these are what I call flash trends. Here's another one right here. These flash trends are essentially potential short-term trending. So here's a whole series of them right here, right here, right here, right here, and right here. What these mean to me is short-lived trends. They're not going to last very long. When they start to last longer is when you start to see, like we have right here, when you start to get change this a different color, when you start to get the pressure system exceeding the accumulated pressure system, which is like right here and right down in this area, this is persistent trending. And you can see here, we start to get up into this area, and we start to get into moderate persistent trending. We get a lot of persistent trending right here. This is good. We get into moderate persistent trending here. We get into moderate persistent trending here. So remember, we're looking for the persistent trending. And persistent trending is very easy to identify. Basically, it is when the pressure system exceeds, to the upside or the downside, the accumulated pressure system. So we're getting into persistent trending here. This is like short-term trending, flash trending. We move into short-term trend or persistent trending here. Big, solid, persistent wave. Okay, we like that. It should coordinate right here with the pressure wave indicator. And then here you can see we get a little bit of flash, a little bit of persistent. This was a big gap up, a big pop. And then you can see we roll immediately into consolidation. We roll around a little bit, and then we start moving into persistent trending right here. That's right where we start to get out of that consolidation range, right in here. So you can see this spike right here. We get into this kind of consolidated range. Right when we get out of the consolidated range, we start moving into persistent upward trending. That's what we want. We want to see that persistent trending. This move here starts out pretty good, but moves into a flash trend type of criteria. This move comes back down. Now we're in downward trending, but we're in what is called persistent upward pressure. So the pressure system has not gone below the zero line, this middle area. This is technically basing, bottoming, building a low base like this, and you can see that coming right across here. So what I wanted to show you here, this is the 2-minute, and I wanted to show you how all of this works. Now the funny thing is I'm going to have to go clear most of this, which is fine. I can redraw them. And I wanted to show it to you here on a combined 2 and 10. Okay, so I'm going to shrink this down, and you can see the pressure system. So now we're gonna focus on right here, which is this early morning rotation. There's essentially the market open right here. I'll draw a line right here, 9:30. There's the open of trading today. So you can see that we're already in a bearish trend. We're already in what's called flash trending. You see right here, flash trending means that we're probably going to be looking at some moderate potential rotation. Then we move into persistent trending right here. Persistent trending means that we are going to see momentum build somewhat aggressively, potentially into a more moderate trend. Notice that we move into persistent trending all the way through here too. This is good, solid, persistent trending. This is flash trending initially. Flash trending, remember, think of flash trending as short term, maybe just rotation, maybe not giving us any real opportunity. We're looking for persistent trending. Here is flash trending. Here is flash trending. Here is flash trending. And of course, this is all flash trending as well. We end up getting back into persistent trending back over here. So how do we address the flash trending versus the persistent trending? Well, flash trending gives us directional momentum. This is actually, gas. Someone hit the gas pedal on the upside. Flash trending here means we're getting a bit of rotation. It's struggling to get out of the way. And we do want to see persistent trending eventually, but we would use the directional systems to try to determine whether or not we're in an uptrend or a downtrend. So we would be using the pressure wave indicator and or the pressure filter system to determine whether we're in an uptrend or a downtrend. Also, the Bollinger Band is a great help to see that we're still in an uptrend throughout this entire move. Now, when we come back over here and we look at this upward trending, as I mentioned to you, we get the persistent trending, then we get moderate persistent trending here, moving into flash trending back over here, coming back down into a brief rotation, flash trending, coming back into here, flash trending, into persistent trending, into flash trending, into persistent trending here, into moderate flash, back into persistent, and then we come right back over here, back into flash to the downside. So this gives you an idea that when you get into these downside trends and they're showing flash, it means that it's probably going to be fairly short-lived. It's just a pullback. Now look over here, flash trending, flash trending, flash trending, flash trending, moderate pullbacks in an uptrend. And remember, this is a 2-minute and this is a 10-minute. So where we're getting this pullback here is at the same time we're getting this pullback, we're getting right over here. We're getting bullish triggers and exhaustion, meaning if we want to, we can pull profits and try to ride these. These are what I call the rapid fire triggers. So these give you the ability to see, look, you can still have a good entry, good entry, good entry, good entry while you're trying to pull profits. You just want to be able to pull profits efficiently in the market trend. Eventually, these things slow down, the rapid fires slow down, and you move over here into exhaustion mode. So, you can see here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 potential, re-entry or re-attack phases in this big, beautiful uptrend. And then they quit right at the top, become a little less frequent, and then we roll over into this flash trend, which really kind of stalls out. So if you look at this day, now granted, it was a pretty clean day today. We had good solid trending, so this gives me the ability to show you, what it looks like from a standpoint of, hey, I want you to pay attention to how this actually works and how this actually trends. Now, building larger waves here, building larger waves means that we're getting bigger swings in the wave formation. Smaller wave formations here indicate that we're weakening a little bit to the upside. We want to see it continue to build to the upside. Now, this could also be that we've had a fairly big wave one move here, all the way up to here, a bit of a pause, moving into wave two, a bit of a pause, moving into wave three. That's another way that you can see these through this rotation. You can see that on the broader wave here, it's just been rock solid straight to the upside. So you get these moves very cleanly to be able to trade this efficiently. And what I want to show you here is how this all works. So now, clear all the drawings again. And now let's come down here, clear all the drawings. Let's come down and take a look at the, okay, I got two of these on here. Delete. And let's get rid of the pressure, the Bollinger Band system, and turn back on the Fibonacci system. Now, a lot of people are probably going to have a tough time learning Fibonacci. And let me just explain to you what's going on here. Fibonacci is the process that price always attempts to establish new highs and or new lows. Always. It does nothing else. Even in congestion and flagging, all it's trying to do is establish new highs and or new lows. So you must understand that price is always doing this. Even in sideways, even in flagging, even in tight, very tight consolidated ranges. It's always trying to establish a new high or a new low. So here we have the 9:30 morning trend. You can see the major, called the ultimate triggers here, which are the ultimate highs and lows. Here's the ultimate highs. I'm sure we have some way back here. Just got to look for them. There they are. So the ultimate highs, when we're in an uptrend, you're going to see a series of ultimate highs, new higher highs. Then we're going to roll over, and eventually we're going to establish a new series of lower lows with ultimate lows all the way down. In the intermediate term, you're going to see these. These are the unique lows and highs being set up. Now, why don't you see them here? Well, they're actually, so ultimate highs and lows are unique highs and lows, and unique highs and lows are standout highs and lows. So understand that we go from the shortest term price rotation to the intermediate term price rotation. Shortest is what's called the standout highs and lows. Unique is the intermediate term highs and lows, drawn with these little dots. And then we have the ultimate highs and lows, which are the big, broad, trending new high and new low structure. So you can see we've established a big, broad uptrend, which also coincides with the unique, meaning every time you get one of these, it's also a little green dot telling you that this is getting a standout and a unique and a ultimate trigger, very strong trending. When it pauses and we start to get these rotations here or these rotations here, this is telling you that essentially price is set up a low, and now we want to watch this low for a breach to determine, okay, we are in a pullback of a bullish trend. At this point, once we get this breach right here off of this low, which has got to be confirmed with a close below, that gives us an indication that we are in a downward trend trying to set up a lower potential low, which we do, but we are still in a big, broad upward trend. So this is a pullback of an upward trend. We don't get into real solid confirmed downward trending or more confirmed downward trending until we see the unique 382 level, which is this, change direction and price move below the unique 382 level. So you can see here, as we're moving higher, price is above the unique 382 and the ultimate 382 level. Being above the unique 382 and ultimate 382 level means that we are in a dominant bullish trend. We stay in a dominant bullish trend until right here. This moves us into a pullback mode. This is all this is, pullback mode. That's really all that's telling you. You can short. We're in a pullback. We're establishing new lows. If price were to get above this level, we'd go back to full dominance in the bullish trend again. Once the ultimate 382 level changes, which it did right here, this now puts us into bearish trending. We are now in bearish trending, and we are going to stay in bearish trending until we move into this area, which puts us into a bullish pullback up until here, which is very short-lived, and then eventually we come right back into here, again, bearish trending. So the easiest way to think about this is when price is below the unique and ultimate 382 level, like we are right here, you should be shorting. You should be ignoring this. And if you want to trade this, fine. Just remember, you're in a pullback of a bearish trend. That's how you have to think about it. So you want to be very quick about your targets, and you want to be able to target these things very quickly. When we move into this area where we're in between the zones, even all the way up to here, this is still a pullback of a bearish trend. We do not get into bullish trending until we get above, right over here, the ultimate and unique 382 levels. That gives us an indication that we are now in dominant bullish trending, and as long as we stay above the unique and ultimate 382 levels here, we are in dominant bullish trending, and we want to only really be trading to the upside. You don't want to try to pick tops while it's going higher. You can if you're quick and good at pulling profits off nice little pullbacks, but when you're in a dominant trend, you pretty much want to ride that trend. And what you want to do when you're in a dominant trend, ladies and gentlemen, is you want to come down here and you want to look at these opportunities to determine where you're going to try to buy. So understand, we're in a dominant trend. We're in a dominant trend. We got a bullish dominant trend, a bullish short-term dominant trend. We're looking here for good, solid rotation. We get a nice solid rotation right about here. This would be a good area to potentially, we're turning green. We're in a dominant bullish, dominant bullish, dominant bullish. Turning green on the pressure system. Looks good. We can go ahead and try to catch a move here with a low stop level. We start weakening our trend here. We would look to try to pull profits potentially up in this area. Say that we're weakening right over in this area. Call it good. Now we come back down here. Oh, look, another nice clean entry. Right over here, we get a nice clean rolling upward, trying to pick our dominant area. We get a nice roll up into this area again. We move into exhaustion. If we have enough profit, we can try to pull our profit right in this area. We get a bit of a pullback. Again, a flash. Again, this is flash. This is flash. This is moderate flash right here. We get it to flip back into green. Okay, looky here. Flipping back into green. Great little entry. Rolls all the way up. We can see it roll into flash. Don't worry about the flash too much. Don't worry about the flash too much. Start looking for where you want to pull your profits. We've got a nice solid rally taking place here. You can either pull profits up in this area or up in this area. Notice that those areas align with fairly strong moves in the pressure system. So this is designed to help you learn to pull profits efficiently, trade efficiently. Remember, we're bullish here. Okay? We are bullish here. We are bullish here. And we've been able to catch nice bullish setups down here using the pressure system. So remember, this uses the pressure system, this uses the pressure system, this and this and this are all designed around Fibonacci and the pressure system. And it's designed to give you the tools to trade more efficiently. Now remember, all of this as well, come back here, is multi-dimensional. So remember, I'm showing you here on the 2-minute how you can trade the ultra short 2-minute. But remember, this also set up a big, beautiful, dimensional long trigger all the way through all of today. So this is a 10-minute. Gave us a beautiful signal. Okay? Now let's come over here and just for the heck of it, let's go look at Bitcoin. Come back up here, go to Bitcoin. Again, 2-minute. Let's go over here to right now. Let's see, what do we got? Right now, we are below, let's come back over here. We are just below the ultimate and unique 382 levels. We've come up off of these highs. We have not established a new unique low. We did back over here, or ultimate lows. So we are technically in a bullish pullback moving to bearish. That's where we're at right now based on this signal moving downward. Let's check the trending system with the Bollinger Band. Still bullish. So we're waiting for a breakout on the Bollinger Band. Again, this would be bullish pullback moving into or to a bearish position. We have a new bullish or bearish position here. We have a new bearish setup here. And we have bearish trending here. So right over here, you can see very cleanly this would be a fairly solid downward trend. You're trading a pullback, so you don't want to be too overly aggressive. Where do you want to get your target area? Well, your target area is going to be likely the next lowest Fibonacci low or high level, which will show you right here that your target area for this move is either going to be there or there. How can I do this so quickly? Because Fibonacci tells me where these points are. All I've got to do is look for them. So you can see you're in a pullback. You probably only want to trade 20, 25, or 30% of your normal position in this pullback. We're looking for a very quick little move here in Bitcoin from this trigger. So basically from here to here, we're looking for a $116 target area, maybe a little shorter back into this area, an $87 target area. Very quick move. We're in a pullback. We want to watch in case we have a flash. We do not have a flash trigger yet. This is persistent trending right now. That's persistent trending. So I can see that we are in trending that should last going downward. And remember, we come back over here, look at the 10-minute. 10-minute is in a bearish trend already. It is in a downward cycle trend here into moderate persistent trending, not very strong yet, and has moved into a bearish trend back over here, which is rolling right over here. So we've technically been in a bearish Fibonacci wave trend over here, waiting for this to roll bearish, which it did right here. Had a little bit of a pullback, which was a flash trigger, meaning it's short-lived. Might just be a failed rotation. And now we're moving down into here, and looks like we're getting into more persistent trending here. So understand, this is persistent downward trending. This is good downward trending, and again, here, if I get rid of the Bollinger Band, we are below the Fibonacci Ultimate 382 and Unique 382 levels right here. We are in a downward trend. This is definitely now a downward trend. We are below both of the Ultimate and Unique 382 levels here. So we are now in, come back over here, we are now in a bearish trend because we are below unique and ultimate 382 to 50 levels. And so at this point, folks, we're just watching this to see what happens and see if we get a breakdown. We would want to watch for weakness. We would want to watch this to see if we start to get signs of weakness. Weakness is going to be in the form of divergence, coming back up or potentially coming back down. You can see as we start to weaken here, as we go across higher highs. This is a sign of divergence, which is why I called it the divergence system. Here we have lower lows coming across here. We have higher lows coming across here. So when we get into these divergent trends, where you can see here, you know, this is giving you divergent trend here, divergent trend here. We're starting to get, you know, some downward movement. I wouldn't call this divergence yet, but the whole point behind this is when we start to get divergence, you can be a little cautious and try to see if you want to keep the position open. So again, this is how it's designed to work. I want you to be able to understand and to try to trade off of this. You can see that we've got, you know, bearish triggers right here. So let me move this out of the way. You can see we've got nice rapid fire bearish triggers right here. Red. And you can see that we've rolled around here, gone back into bearish triggers here on the 2-minute. Really on the 2-minute, you want to balance it off with something like a 10-minute or a 7-minute, you know, or maybe even a 15-minute. That way you can pick your trades in here, determine what you want to try to do by following these longer term trades. If they're conflicting, then, you know, wait it out, or maybe try to target some very short-term trades. But that's when you want to be a real scalper, because there's always something moving. Okay, always something moving. Like if I come over here and take a look at the ES, if I get a confused signal and I don't know what I'm going to do, I'm not going to force myself to trade. So here we go. We just rolled into this mode. Let's see what that is by spreading it out. Oop. So here's our 2-minute. Spread, spread, spread. So you can see how we rolled through this. The ES is up $2.5 points. Nothing major. We're in a bullish trend. Can you see that here, guys? We're above the ultimate and unique 382 levels. We're in bullish pressure systems here. That's what this is telling us. We're in a bullish trend here. We're in a bullish trend here. And technically, we're in a bullish trend here with exhaustion setting up right here. We're now in a flash pullback. You see that here? That's a flash pullback. Come back over here. We are in a bullish trend. We are moving higher here. We're in a bullish trend here. We've reached exhaustion. And we are in persistent trending right now. This is persistent trending, meaning that we are getting what we call good organic growth trending. So, where would we want to try to trade? Well, we would want to try to trade the minute that this turns back into green, and as long as we're up above these ultimate 382 levels, we've got a pretty clean, wide open trade to try to go ahead and get long. And it's just a matter of waiting out this pullback right now and seeing what happens. We still have persistent upward trending. We're into exhaustion. Maybe wait for a trigger here, or maybe wait for another green trigger here. But we need to wait for this flash trending here. This is flash trending. We need to wait for this flash trending to end. Again, flash trending can be very quick, short-lived, but it can also be fairly dangerous if you're trying to pick a bottom in the middle of a downward flash trend. You can see right here, flash trending can be quick and rotate, or it can be a little more aggressive and a little bit more deadly. So better off that you just wait for this to move out of this flash trending mode and turn green, and then that'll give you an entry back over here. We're still in bullish mode, very easy to see. Bullish above the ultimate and unique 382 levels. We're getting this rotation. We're getting this downward trending. No big deal. We're not taking a trade. We will take a trade when this turns green, So I'll just put this here. When this turns green, I would be looking for a trade, assuming this is still solid right here in green mode, and this is still solid in green mode, and the Bollinger Band is still solid in green mode. As long as everything is lining up, it's pretty simple for me to go ahead and target this type of a move. It's almost like I call it like a voting system. You know, if A and B and C and D and E, this one, just turn green, so hypothetically, if this went from red and you had everything else green, and then all of a sudden our triggering system went to green, what would you do? You'd probably look at this and say, look, I'm cleared for a long. This is a good long trade setup. The triggering system right here just went to green. So that's what is ending up happening here. You're building a like a red-green light, like in any street corner in America pretty much. When you get a bunch of greens, green, 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 go. That's a bullish trigger. When it's red, 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 and you're getting a triggering mechanism like this, the pressure system moving into red, that's a go. That means you can go. If you're getting red like this, like you have right here, so here's a great example, you're getting red right here. Okay, everything else is green. This is green, this is green, this is above, this is green, this is green, this is green, this is green. Everything is bullish, but you've gone here into red. What does this mean? This means you're getting into a pullback. And what you want to do with this is you want to trade this as a pullback. You're not even hardly, well, let me clear that. You're not even hardly seeing any profits in this move yet. You've got to shrink it down. You've got a 25-cent profit, a one tick profit in this trade right now. You're going against the trend. And the reason you're going against the trend is because everything else is green. And you're going against the trend. So what you want to do is you want to look at this as a very quick pullback, potentially targeting a move maybe down into the 2-minute ultimate 382 level, and just call it done. That's it. You're going against the trend. So 1 3/4 points, maybe 2 points, and you're done. That's the end of your trade. You don't want to be chasing it any further than that, because you're going against, you're kind of like trying to shove a train in a different direction. And yeah, you might get lucky and get it to move a little bit, but it's going against the trend. You're really trying to shove a 14-ton train in a different direction. And you're not going to be successful all the time. Okay, so I know this is a little much to grasp. We're going to keep going over it. But I want you to understand how I envision you using it. And remember the street lights. Okay, that's a great way to figure out how to use this. It really is like street lights. See, here we've gone to bearish now. Okay, good. Let's take a look over here. We've gone into exhaustion. Okay, we moved into persistent trending here. We've gone into bearish trending here. We're still bullish trending here. We're still above the 382 level here. So we're getting a little bit more confirmation with this short-term indicator and this pressure system that we're moving into moderate, persistent downward pullback. That's the way I would read it. We are still bullish over here. We're still bullish over here. And we're still bullish over here. So again, this is a moderately persistent downward pullback simply because of where we were here. Now it looks like we've lost our persistency, but we still have this short-term downward trend. Can you see how this is working? I hope so, because it's designed to show you, again, where we're at with the trend and what's actually taking place. You can see here, this was a beautiful type of a flash move. Flash moves can be very quick, but you want to remember, as soon as the flash move starts to show weakness, pretty much start booking. Start booking profits. And that's a great way to try to anchor in some real winners over and over again. Okay, guys, more later. Let me know if you have questions. or want me to go into deeper detail, okay?